and welcome to the first ever White House Digital Assets Summit. We have tremendous people very interested in this subject, and last year I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet, and we're taking historic action to deliver on that promise, as you know, around the table. Yesterday I signed an executive order officially creating our strategic Bitcoin reserve, and this will be a virtual Fort Knox for digital gold to be housed within the United States Treasury. That's a big thing.
As you guys know, just recently, Donald Trump signed the executive order creating a strategic Bitcoin reserve with 200,000 seized Bitcoin to fund the reserve and a separate digital asset stockpile for XRP, ADA, Ethereum, Solana, with a full audit of government-held digital assets incoming. And many people want to know, what does this mean for the industry? Because during the White House Crypto Summit, Trump just basically reiterated what already happened, and then the stream went offline, which was a little odd because they didn't say anything about this being a closed-door meeting. So what we just saw was the introduction to prove that they're there for publicity. And in this video, we're going to talk about the effect that this is going to have in the short term, the midterm, and the long term for the crypto market. So pay close attention all the way throughout this entire video, because we're going to bring up the charts for total 3 compared back to the past. We're going to bring up the relative strength index, the stochastic RSI, and the MACD to look for confluence on the charts. We also have to share with you the third signal in 12 years coming from some key charts that give us a window into the future based on what's happened in the past. And also we're going to discuss when the most likely top is going to come in for the entire market based on the halving cycles theory. And also a bombshell for XRP holders, with many people saying that Ripple is going to be giving 45% of its XRP in escrow to the government. Is that actually true? Well, stay tuned. You guys are going to absolutely love this video. So comment 777 if you're feeling blessed. If you're feeling bullish, let's run it.
From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin. That's a little phrase that they have. I don't know if that's right or not. Who the hell knows, right? Who knows? Who knows? But so far, it's been right. And well, let's keep it that way.
All right, bull runners, welcome back to the channel. So with Donald Trump delivering remarks about never selling your Bitcoin, well, he didn't say that about altcoins. And so with altcoins taking a little bit of a pullback over the past hour after this news being lackluster, if we look at the Bitcoin price chart, sitting at $87,139. And since the 20th of January, people have been selling off their Bitcoin. So what's a likely scenario to happen next in the markets? Because over the past few weeks, Bitcoin has remained underneath $100,000. And there's a key support right here on the chart at about $93,000 that Bitcoin could not hold above by the end of February. And when it dropped below it, the most recent bullish catalyst was Trump announcing the strategic Bitcoin reserve, digital asset stockpile, pumping Bitcoin back up into this resistance, and then it getting rejected the next day as he announced the tariff news. So as we coil up here, let's dive into the chart and discuss what's the most likely scenario to happen next for Bitcoin and the altcoin market, because the markets generally move together. As you guys can see over the past month, with Bitcoin selling off, well, the altcoins are bleeding out even more, with a lot of these projects down 20, 30, 40, 50, 60%. So let's discuss total 3's chart, and let's bring up these key 3 indicators to look at them, because in my previous video, we talked about bullish versus bearish divergences and how these were playing out on the chart compared back to the past, and some key areas of confluence that we are looking for to give us an idea of what's the most likely scenario to happen next for the entire altcoin market. So in this video, I'm going to dive a little bit more into detail, but I think it's important to know this. We see chart patterns play out time and time again, each and every single bull run through Elliott waves. For example, we have 5 major wave patterns where we have impulsive waves to the upside. That would be wave 1, wave 3, wave 5. And then we have corrective waves to the downside. That would be wave 2, 4, and then after the 5 impulsive waves are done, then we have A, B, C, which would be a bear market. For example, on the chart right here, you guys saw this happen last bull run on the macro with major A, B, C corrective waves to the bottom. But if we zoom in on the micro, we see these corrective waves take place in between the major impulsive waves, which would be wave 1 impulsive, corrective wave 2. We see an ABC wave in the corrective, impulsive wave 3, then we see ABC wave going to corrective wave 4, then impulsive wave 5, then we see a much more macro ABC corrective wave to the bottom. And so last bull run leading into May of 2021, this was impulsive wave 3, and it was the most drastic, most rapid impulsive move. And then we saw corrective wave A down here to about 400 billion, this bounce for complacency to B at 700 billion, then to the final C wave right down here before finishing up impulsive wave number 5 to $1.13 trillion by November of 2021. So what we're going through right now on the right hand side of the screen is an A, B, C corrective wave. The real question is though, have we seen the bottom of the C wave, or do we have further to the downside to go? So what we need to look at here is these key indicators to bring up the relative strength index first that you can see on the bottom of the screen. So right now the RSI is at 44. And if we look at what happened last bull run after that major pullback right here from $983 billion, in my video yesterday, I talked about bearish divergences where we see a higher high on the price chart. We definitely saw that right here when we put in a high of 825 billion on total 3 in April of 2021. And then by May of 2021, we put in this higher high around 900 to almost $1 trillion. Whereas on the key indicator, the relative strength index, we put in a lower high here showing that momentum had shifted from bullish momentum to now bearish momentum, telling us that we're about to go through an ABC corrective wave, leading us into wave number 4 before the final wave 5. And so what we saw happen here was the relative strength index drop from this lower high from 74 all the way down here to about 37. Now on the right hand side of the screen, we can see that the market was aggressively breaking out, forming higher highs. The relative strength index though was forming higher highs until the 24th of November. And then by the time that we formed the recent local high all the way up here at like 1.16 trillion, the relative strength index didn't make a lower high, but it barely made a higher high. And we were all the way up here of 85 in overvalued conditions. So this isn't going to be textbook the exact same, but let's look to see what happened after that major sell-off to the A wave. Because on the left-hand side of the screen, we saw the market pull back drastically along with the relative strength index down to 37. On the right-hand side of the screen, we saw the relative strength index pull back from 85 all the way down here to about 42. So we had a massive pullback. Then we saw this B wave bounce to put in a lower high, just like we saw happen back here from May to about June. And the relative strength index put in a lower high as well too, back up to 50. We can see the relative strength index put in a lower high to about 64 by the 18th of January. And this was a major bull trap to get people to think that the market was going to just break out into a new high, whereas we then sold off from down here to the C corrective wave. And then the RSI dropped all the way down here near 30 to about 32 at the bottom of the screen, very similar to what happened from this B wave from the 3rd of June to the C wave to the end of June. The RSI dropped all the way down here to about 30. So what we're seeing right now with the relative strength index in the bottom right-hand side of the screen is it ranging between 30 and 50 right now. Very similar to what we saw happen right here between the 23rd of May all the way until the 23rd of July when the RSI finally broke out from being below 50. So there was still a lot of volatility during this time frame while the market was finding this low, because even after the C wave was in, you guys can see an attempted recovery right here by the beginning of July, but then it inevitably rolled back around again to put in a higher low than the C wave corrective low. And so I talked about that in my video yesterday, where until we see a higher high get put in than the high of the 14th of February, this is going to be a major resistance at like $950-ish billion. So depending on what comes from this closed door crypto White House meeting now, the crypto market is going to need some bullish catalyst to push this above $950 to hold it as support. Otherwise, in my opinion, what I think is going to happen is we're going to roll back around here to either put in a higher low or potentially back test $750-ish billion. So where this C wave was right here by the 3rd of February and this wick right here on the 20th of February, this is going to be the major support to watch for the crypto market. Very similar on the left-hand side of the screen, how this A wave right here and this C wave right here was major support for the market to bounce off another time. So what I think is coming for the market is another pullback either into this region or close to it before we start working our way through here to the upside to finally clear $950 billion. Similar to what we went through on the left-hand side of the screen right here before the market eventually breaks back to the previous high. Because right now, currently, the bears are in control with the relative strength index below 50, with us sitting at 44. Now, another thing that we want to look at is the stochastic RSI to see if we are overbought or oversold. For example, during this C corrective wave right here, if that is in fact the C wave, there's a potential that we go even lower to form the C wave and then have to work our way out of that bottom. What we want to look for is oversold conditions beneath 20 on the stochastic RSI. So all the way back here on the 22nd of June of 2021, the stochastic RSI was all the way down here at like 5 for both the K line and the D line. And so if this is the C wave right here, you guys can see we were well below 20 by the 3rd of February, all the way down here. And even right here at about $746 billion, you can see the stochastic RSI was all the way down in these levels. So anytime we're between, 20 to 80, it's kind of neutral depending on current market conditions and what's happening with the Federal Reserve and other aspects that we're going to cover in future videos. So I'm usually not aggressively bullish during situations like this because we haven't cleared a previous high. We're right in between a support and a resistance, and the stochastic RSI is right in the middle with the K line at 57, the D line at 55. And so even on the macro, I'm extremely bullish. On the micro, I'm neutral right now until I see one of two things happen. Number one would be a break of a previous range high of the 14th of February of about $950 billion and a back test holding as support for a few days on end, not just a quick wick to the upside and then dropping back down below like with this Trump news right here that pushed the market cap upwards of $936 billion and 24 hours later it drops all the way down to $800 billion. That's not what I want to see. I want to see a break and close of this resistance, number one, hold it as support for multiple days, or number two, I would wait to see a break below support and then holding it as resistance right here. Otherwise, I remain neutral on the market right now because we're still in a downtrend forming lower highs. Just like we were in a downtrend during this ABC corrective wave right here until we put in a higher high right here at the end of July and we held this previous range as support like I talked about in my previous video. So if that doesn't happen, I would just expect the market to roll back around and potentially backtest this previous low from the 20th of February and also this low on the 3rd of February right here, while the stochastic RSI potentially rolls back around to 20 or even below 20, because look what happened in the last bull run cycle. And every single time we see these A, B, C corrective waves, once the C wave is in, it doesn't mean the sell-off is over, because as you can see, we rolled around back here for another bottom and then we broke on out of there after that major sell-off was over. So this is why it's important to understand how to read charts, because we see triangle patterns play out time and time again. For example, on the left-hand side of the screen, we can see a descending triangle right here. And a descending triangle is just simply in a downtrend, we see a consolidation period where we form this descending upper trend line of lower highs and a flat lower trend line. And usually this type of pattern breaks to the downside for a trend continuation after we've coiled up in the apex of the triangle. But as you can see, we actually reversed and broke to the upside. So it's not cookie cutter here. And on the right-hand side of the screen, you guys can see that this is more or less looking like a falling wedge with lower highs and lower lows right here, because this A wave is not really that close to where the C wave wick was, because the C wave is a lower low. Whereas on the left-hand side of the screen, this A wave and the C wave was pretty similar. The C wave just had a lower wick down here to like $380 billion. So it's more of a descending triangle. So on a falling wedge, what we look for is a breakout confirmed on a close above this descending resistance, but we don't buy the breakout. We would either buy a retest of the former resistance acting as new support. So what that would look like on the right-hand side of the screen is this descending resistance right here, a breakout and a back test of the descending resistance as a support. But a better entry point, in my opinion, again, this is not financial advice, take with it what you will, because crypto's risky. You could definitely lose money in these markets, and these videos are purely for educational, informational purposes only. A lot of the times descending trend lines can be moved, so they are a little bit fickle. For example, if I just trace up from the high here on the 12th of May of 2021 to this B wave right here, you can see that there was a breakout from this descending trend line right here, roughly on about the 29th of June. So we broke out, we held it as support right here. So a lot of people were entering into the markets by like the 1st of July, thinking that the markets were just going to go up from right there. But that's not what happened, because as I just showed you guys, we rolled around and we came back down for another low to bounce off of this zone of demand as support right here from the A wave and the C wave. So this is what we want to watch for. So on the right-hand side of the screen, if I were to just draw from the C corrective wave to the wick right here on the 27th of February, this would be the zone of support that I'm looking for. So for me personally, I wouldn't buy a breakout in a back test, because we could see something like this play out where it just comes down even further into this range and it rolls over, like we saw happen here from July of 2021 until the end of July, the beginning to the end of July, for another bottom right here before we saw the breakout take place. That could definitely happen. What I want to look for is confluence on these multiple key indicators. So I want to be looking for the stochastic RSI all the way down here below 20, just like we saw all the way back here in the middle of July. The stochastic RSI was below 20 while the price was back in this key zone. And to play it very, very safe, I might not even buy in this zone right here unless I have macro patience, which obviously I do. I know a lot of you guys on this channel do. What I would want to see is a break and a close like I just showed you above the previous high for a confirmed trend reversal. So I would want to see something like this play out where we bounce off of this and we start working our way through here. Inevitably, we clear $950 billion, and we hold it as support like this. This right here, in my opinion, would be the best entry point, even though technically you're not getting as good of a deal as you are down here. You're avoiding catching a falling knife, because just because it looks like we're in a falling wedge right now doesn't mean this can't change to a descending triangle pattern that ultimately leads to a trend continuation if we break support. Because let's say, for example, the price rallies all the way back up into this resistance and gets rejected from it, comes back down to this support right here, bounces from support, then comes back to resistance again and drops back down to support again. Let's say something like that happens. Now, we'll reanalyze the chart and I'll keep making videos about this, so make sure you guys subscribe to the channel. We're not there yet, but let's just say hypothetically something like this happens. Well, if you were to buy in this zone of support right here, and let's just say the price breaks below your entry point right here, comes back and back tests it as resistance, well, then you would be roughly at a break even thinking that the markets are going to break out. And what if they don't? What if they continue to the downside for a trend continuation like they normally would in a descending triangle pattern? So yes, technically you are getting a better entry point if the markets do reverse to the upside by buying into a support like this, but playing it safer and waiting for a trend reversal to clear a previous high and hold it as support is how you preserve your capital so you don't get wrecked at this stage in the market cycle. So for example, right here, if you did not buy this last dip buying opportunity right here in the market, and you bought right here by the 3rd of August, yes, you are technically buying a little bit higher, but you still caught some amazing gains during that next move up, about 87%, even upwards of 100% in the market. So option number one of buying into a major support, like what happened here on the 20th of July, is only for the people that have balls of steel and can stomach further sell off to the downside by trying to catch a falling knife. Option number two, by watching for a breakout and then buying the back test of a previous high, is how you can still make gains in the market if we continue to the upside, and how you can play it more safe so that way you're not holding the bag in case we break further to the downside, having no money left to enter into the market for a low. So patience is your best friend here. So I have good news and I also have bad news for you guys. The good news is that this sell-off looks like it's nearing an end here, and we're going to see a major move happening over the next 1 to 2 months in the markets. I personally believe it's going to be to the upside because of what I'm going to share you throughout the rest of this video, so keep watching. But the bad news is we could see another back test of the previous low. So the people that are buying right now might not be getting the best entry point, but that could be good news depending on how you see it if you look at that as a better opportunity to buy. So let's look at the MACD, the moving average convergence divergence, and let's see what we see on the chart. Right now, this looks amazing to me because we are below the zero line right here. We're seeing a lot of indecision with these bullish crosses, these bearish crosses. We just went through another bullish cross well below zero, but that reminds me of exactly what happened right here between the 1st of June of 2021 until the 22nd of July when the MACD was all the way down below zero as well too. We saw bullish cross, bearish cross, bullish cross, bearish cross, bullish cross, fake out, then finally a breakout. So this is what I expect to play out over the next month below zero. And what that looks like on the chart, we will see whether it's something similar to what happened right here with a break of a descending resistance, rolling over one final back test of a previous low as support right here on the 19th of July, while the MACD line crosses above the signal line, inevitably crosses back above the zero line. So what I look for is divergences. I covered that in my previous video, and then confluence as well too. So go watch that previous video after this one. But if I were to just draw a descending resistance from the 18th of January, you can see we're still in this downtrend right here. So I would just expect something similar to play out. Even with a breakout right here, I would expect it to roll back around for either an equal low or a higher low than what we saw right here on the 20th of February or the the 3rd of February. And then I expect the breakout to start after that. And I'm just watching $950 billion. So if you guys want weekly analysis on the markets, then you can join Altcoin Pro University through the link in the description below and attend our Technical Analysis Tuesday calls with Paul from the team here. The next one is happening this coming Tuesday between 7 p.m. to 8 p.m. Eastern Standard Time. And if you want to watch the previous one, you just go into Classroom right here. You go into live call recordings. You'll see every single weekly live call that our research team does. And you can watch the one that happened on the 4th just a few days ago right here. Is about 1 hour and 42 minutes long. What was covered was understanding confluences in market dynamics, Bitcoin, XRP, Solana, and Ethereum analysis, risk management and disciplined trading approach, some Bitcoin price action, key levels to look for, and then comparing Bitcoin to Ethereum to XRP market performance if you hold any of those cryptocurrencies. So the call was absolutely incredible with Paul. You guys are going to love the next one. And on top of that, we're always leveling up the education inside of Altcoin Pro University to help you master crypto. But I have a question for everyone. I posted this in the community right here, because if you could take what you're learning here, whether it be on the channel or inside of Altcoin Pro University, and share it with others as an affiliate, imagine spreading the word about our crypto education and earning passive income just by sharing something you believe in. We're not looking for spammers. We're not looking for troublemakers, people that are just going to go and blast their link all over social media. We just want people who vibe with what we're building here, that have gotten value from Altcoin Pro University so far and the Bull Runners channel, and want to make money with us the right way. So I'm curious, would you be into that if we opened up some affiliate spots? If so, then drop a comment below this video or in the Altcoin Pro University post right here that I just made before recording this video. And I'd love to see how many of you guys are down to share what we're building here with the world. And who knows, maybe we'll open the doors for a few affiliates in a beta test group based on what you all think. So far we got about 20 comments, which is cool. So check it out. Again, it's only $97 a month, pay as you go, no contract, no commitment. We have a 14-day money-back guarantee, so if you don't get results, then you have nothing to lose. You can get your money back. And best case scenario is you completely transform your portfolio by surrounding yourself with the right people in our community. So look at this. This is what TechDev just posted yesterday, showing Bitcoin's price chart with this key indicator and where we were in the past before a major move took place. And would you see confluence here that a major breakout happened after we're at this key point in the indicator? Now, he doesn't post what indicators these are, so we just don't know. But this cycle is much bigger than most people realize, and it simply doesn't care about opinions of what's happening from a fundamental perspective of just these major announcements or lackluster announcements like what we saw today at the White House. Now they're keeping the secrets reserved for a closed door meeting. So if we look at Bitcoin's price chart paired up with liquidity cycle right here of when the market cycle top came in, the liquidity cycle was at a peak relative to the past. So where are we right now? Are we at a peak or are we at a trough, at a low? We're relatively low. And where were we at when we were relatively low in the past cycles, right before a major breakout happened every single time? So will it play out like history, or will we see something completely different happen and end this cycle 1 year earlier than we normally do? I think you guys know the answer to that, because we haven't really seen a true altcoin bull market rally, because we're still below on the total 3 chart the previous high of November of 2021. So we just barely broke into price discovery. If this is the high of the market cycle, I would be really, really shocked. This to me just looks like a consolidation period during a pullback, because we're still in an uptrend right now. We're forming higher lows, and also we're forming higher highs. So we're in a bullish channel right now ever since the bear market low from the 1st of January. So even if this consolidation, just like I showed you on the micro, takes a little bit longer to see a breakout in the market like this before we pass the previous high of December of 2024, I think we're going higher. Now, I thought this was a great post by CryptoCon here on Twitter, with Bitcoin cycle top calls coming in left and right. People are usually the most bearish right before a reversal takes place. Alt season has not budged an inch. Cycles remain perfectly on track. Data is aligning with the 2015 to 2017 market cycle between January and March. In crypto, let's be real here. It's a hard game now more than ever before, because we have institutions playing the game too, and they like to manipulate markets, as we've seen with the SEC news of the ETFs, and as we've seen with the Trump tariff news, insider traders buying Ethereum or XRP before major announcements happening. People aren't used to being this patient in crypto because of what happened in 2021, where the market's just going up without these long drawn out pullbacks and consolidations like this. So I personally just think that institutions want to wring you out fully like the sponge and leave you out to dry before letting you get to the best part, because they understand that people lack patience. And if that's wrong, then so be it. We've weathered recession call after recession call, including black swan events. They were just as convincing every single time that the market was over, just as they seem now. But when we look at the facts here, which is the charts, and we compare back to the past to look for confluence, we can see where we're at in this market cycle. So look right here on November 28th of 2024, when we were at the peak of the halving cycle sine wave right here, transitioning from purple to light blue. That doesn't mean we're at the peak of the market cycle, because we saw the same thing happen from November 28th of 2020 going into 2021. On that major breakout by January of 2021, when Bitcoin went to $41,000 right up here and then had this first major pullback after breaking into price discovery, well, that's when we were at this little light blue circle right there, just as we were recently with this major market breakout, with Bitcoin rallying upwards of $110,000 up here, and now we're seeing a pullback. We saw the same thing happen in January of 2017, transitioning from purple to light blue. And we saw the same thing happen in December of 2012. So this chart right here is predicting that the top of the market cycle is going to come in red roughly by November 28th of 2025. And then we're going to see a bear market bottom by November 28th of 2026. And then the next market cycle top is going to come in by November 28th of 2029. And if we just trace up the bars pattern from the bear market low of December of 2018 until the high of November of 2021, and we pair it up to where we are right now, you guys can see like clockwork, that 40,000 rally and that pullback right here is almost to the T what happened by December of 2024. And now we're just going through a longer pullback than what we went through right here. So they're shaking people out of the market right now. And as you can see, this is predicting that the top of the market cycle right here around October, November of 2025. So is the market cycle over? Well, I don't think so, just based on what I've seen thus far on the charts. Do I think Bitcoin's going to go to $500,000 or $1 million this cycle? No, I think it's unlikely this market cycle, but I do think we have another major rally in us this bull run before a bear market happens. Maybe two, but either way, over the next 1 to 2 months, it would be very coincidental if we see a breakout in the market. Because if we look at the Bitcoin to the US dollar price chart right here, from Crypto Rover, along with the Global Liquidity Index, with this trend ribbon right here, we can see that when global liquidity started to break out, we went into a massive bullish breakout for Bitcoin each time. So if the Global Liquidity Index starts to break out into new highs, then Bitcoin will shortly follow that. Because it's not necessarily about the 4-year halving cycle theory, it's more so about the global liquidity cycles and how they operate. And so regardless of whatever happens from fundamental analysis, from Trump making these announcements about strategic crypto reserves and stockpiles for Bitcoin or altcoins like Solana, XRP, and Cardano, that's why it's very important to learn how to read charts. So join Altcoin Pro University, attend our technical analysis Tuesday calls with Paul. I have learned a lot from this guy. It's absolutely incredible. And if you guys don't get any value within your first 14 days, then just ask for a refund. But either way, we're going to continue providing value with you guys each and every single day. So make sure you subscribe to the channel for more. Listen to this.
Just going into what's in the holding of the US government, going back to what President Trump mentioned over the weekend, talking of Ripple, Solana, other alternative coins that people are wondering whether they're going to be included in this stockpile. Will they? Does the US own them? Why mention them by the president?
Well, the president just mentioned the top 5 cryptocurrencies by market cap. So I think people are just reading into this a little bit too much. He just mentioned the top 5. In terms of what we'll actually have, again, we have to do the accounting. We're not sure, sitting here today, whether the federal government owns any of these alternative cryptocurrencies. We know it owns Bitcoin. I believe it owns some Ethereum. I'm not sure about the other ones. This is why we have to do the accounting, is that, to be honest, no one's been able to give us a straight answer yet in terms of what the federal government owns. And this is part of the problem, is that we've never really had a digital asset strategy before. And this is why we've, missed out on accumulating a lot of value for the American people.
So the real key to understand about this Bitcoin reserve, this digital asset stockpile, is nothing different than what the government already had, because they were confiscating Bitcoin from illegal activity, but they were selling it. So all Trump basically announced is that they're not going to be selling it. So instead of calling it a strategic Bitcoin reserve, they should just call it a diamond hand stockpile, because Trump is just saying that they're not going to sell it, as you guys heard at the beginning of the video, rather than the previous administration selling it. So whether they are going to buy XRP or buy Cardano or buy Solana, they didn't say that. They just said that they're going to hold Bitcoin, and they don't even know if they hold XRP, Solana, or Cardano. So the pump with that news was just purely speculation and noise, unless they actually do something. So right here, this was posted by Jeremy Hogan saying, although the Ripple judgment is denoted in US dollars for the settlement cost for selling XRP to institutional investors, and that $125 million something odd dollar fine, well, it is possible, he's saying, that Ripple could satisfy the judgment against it by transferring the same amount of XRP to a federal XRP stockpile address. So that question arises, and there were some rumors out there about Ripple giving 45% of its XRP supply to the government. So Crypto Erie posted this saying if she were on the strategy team at Ripple, she'd propose an ongoing percentage of its monthly XRP release to the US stockpile using the escrow to showcase the XRP ledger technology for automatic, secure, traceable, tamper-resistant, irreversible distribution. So the US made it clear they're not interested in buying crypto with taxpayer funds, so all eyes are on the Ripple XRP escrow now. And the escrow is strategically designed to be allocated to central banks or the Treasury when they're ready to shift the system. According to Black Swan Capitalists, all banks will eventually become licensees of the Treasury. It's been the plan all along towards a world central bank. Now, is that what they're discussing right now behind the closed door meeting now at the White House? We will find out soon, but look at this. Mr. Poole posted and just said, escrow. So hypothetical scenario, Ripple transfers its escrow with XRP, which is approximately 38.9 billion to the US government, whether it be all of it or a fraction of it, and the government, as a solution to eliminate the national debt, sets the price of XRP at 1 XRP to $1,000. If the Treasury Department announces that XRP can be used to offset 36 trillion worth of debt, the national debt would be instantly canceled out. So what do you guys think about that? Because on US Debt Clock, it shows $36 trillion right here. That is clearly unsustainable. So whether that happens or not, we will see. Either way, we want to help you guys make money regardless of whatever happens. And XRP doesn't need to go to $1,000 for you to make money. It doesn't need to go to $10,000. If that happens, and I've said time and time again, anything's possible, I'm just not expecting that this bull run cycle. What I am doing is I'm properly preparing by structuring the best education with our research team that the industry has ever seen inside of Altcoin Pro University. So you guys can get access to all of this by clicking the link in the description below, watching this 26-minute video, and getting started right now. Now I can tell you how awesome it is, all that I want, but it doesn't matter unless it's proven. So go watch this video right now by clicking the link in the description below, because our team even said Solana is most likely to be one of the easiest trades next year. And this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.